If you need to report your GHG inventory, your carbon footprint, either because you're required to by regulation, or maybe your stakeholders are asking you to do it, or maybe you just want to, you just need to make sure you're doing it right. Luckily, there are a set of handy principles that, as long as you apply them correctly, should keep you on track. Hi, my name is Kev Coonan from Hut22, your carbon and facilitation experts. Look, if you don't want to watch the rest of the video and you want to jump straight into speaking to an expert, then go find the link in the description of this video and book a free call with me today. I'm going to talk to you about the reporting principles as published by the GHG protocol. Now, that protocol is probably the most widely accepted standard for carbon reporting. In fact, it's the standard that other standards refer to. So as long as you apply these principles, you can be pretty sure you're not going to go in too far wrong. I'm also going to mention some principles that are set in the UK environmental reporting guidelines, because they throw a couple of extra ones in just for good measure. The principles as set out in the GHG protocol are relevance, completeness, consistency, transparency, accuracy. And the two extras that UK guidelines throw in are comparable and quantitative. Okay, today I'm going to talk about relevance and completeness. So when it comes to relevance, the definition in the GHG protocol and in the UK guidelines is essentially the same. Here it is. So ensure the GHG inventory appropriately reflects the GHG emissions of the company and serves the decision-making needs of users, whether they're internal or external to the company. So in real life, what that means is the information you publish should reflect the structure of the business, its relationship with subsidiaries and so on, and not just the legal arrangements around the way the business is structured, which of course could be quite complex and may not align necessarily with the responsibility for carbon emissions. In GHG reporting speak, we're talking about boundaries. So firstly, the organisational boundary. And that's typically defined as the level of control that the organisation has over other parts of the business, subsidiaries or other companies that it's got investments in for emissions that it should be reporting on. Now, the specifics are defined by what's called the consolidation approach. Now, that's quite a detailed thing. If you want a post on that, leave a comment below and I'll do a post on it. But you don't need to worry about it too much. Just know that you need to define your organisational boundary. Okay, the other boundary is the operational boundary, and that's all about the emission sources you're going to report, and importantly, which of the 3 emission scopes, 1, 2 or 3, you're going to allocate them to. Now, if you're not sure about emission scope, there's a link in the description to a blog post where I talk about those. So ultimately, if your reporting is in any way abstracted from the realities of the business, it's really not going to be fit for purpose for stakeholders to use in their decision making. Okay, let's move on to completeness. Again, the definition for this one, the GHG protocol and the UK guidelines, is pretty much the same. So account for and report on all GHG emission sources and activities within the chosen inventory boundary, those 2 boundaries I just mentioned before, and disclose and justify any specific exclusions. Okay, this one's pretty self-explanatory. Basically, you just need to report everything that you can. In instances where you can't report something, but you know it exists, so maybe you haven't got enough data to make a robust estimate, or maybe you just haven't got any data at all, but you know there's something there, then you need to make sure you disclose that as a known omission. That's emissions with an O, not an E. Now, if you've been reading about carbon reporting, you might have heard about something called a materiality threshold. Now, materiality threshold is a way of saying that emissions below a certain level aren't going to be material to your overall inventory and therefore can be ignored, but don't be tempted by it. In order to understand whether or not a particular emission source is going to be below the materiality threshold, you have to quantify it. And once you've quantified it, you might as well report it. So don't be tempted by a materiality threshold. It isn't really a thing. Now, don't confuse that with the de minimis value, which some reporting regimes allow you to use, such as the Energy Savings Opportunities Scheme, for instance, ESOS. That allows you to ignore a particular amount of energy consumption, because that's what that one happens to focus on, if there's a high degree of confidence that is below the allowed de minimis value. So that's fine in those situations, but for general carbon reporting, don't go there. So there you have it, the first 2 carbon reporting principles explained. You're welcome. My name is Kev Coonan from Hut22. If you want to talk to me about carbon reporting or any other element of net zero and carbon management, go ahead, find the link in the description and book yourself a free call with me today.